Yes, thanks a lot for having me back once again. So the COVID-19 pandemic accelerated trends that we had begun to see trickles of earlier last year, and we have seen a stabilization of these trends that were accelerated across the various sub-markets in Nigeria's real estate market. And we see we see an increase as we head towards the end point of the year, although there have been a few changes.
All right, but when you look at some of the leading cities like Lagos and Abuja, and also some of the second-tier cities, what trends are you seeing play out across the segments?
Well, that's a very big question to ask. Now, for residential, for the leading cities, it's pretty easy. We find that around the central business districts, we see demand for residential apartments that are fit for purpose, that are close to main transport routes, and are highly secure. The farther away they are from the main roads, the better. Again, gated communities have begun to see significant demand, largely because of the security challenges that have been experienced hitherto. If you move to the retail markets, what you find is that the demand for assets and then, of course, logistics have emphasized the need to spread out for many of our retail sectors. So you find that more branches are opening, although they're not as large as the former or earlier iterations. Again, for industrial, what comes to mind is warehousing. Now, warehousing has long been the forgotten child of the real estate family, but we find that because of logistics and the need to move products around various cities, you now find a growing interest for industrial and, of course, warehousing. And then you go on and on. I guess the only main spike that you would see would be for healthcare, where demand has been significant, especially for primary healthcare services.
But let's get into, still on the segments here. I want to focus on the residential here a bit and what we'll see play out here in Lagos, especially what is shaping that segment in Lagos.
Okay, so in Lagos, we will have to look at various markets, at least by location, which is one of the ways we can divide. You find ordinarily that the Lagos Island, that would be the Ikoyi, Victoria Island, and Ajah areas of Lagos have always had strong demand. And so you see developers doubling down on research-backed development. So, for example, 3 beds and 4 beds mini estates have been coming up all over the place, especially for developers who have captive clients, on their list. Now, ordinarily, Lagos mainland didn't have much interest, because when you look at per square meter comparisons, in terms of land values, I mean, it couldn't hold a candle to Lagos Island. But you find that now there are more investments going towards the Lagos mainland area. You find that this is beginning to be the trend, and a few areas come to mind: Maryland, Ikeja GRA, Agogo.
But I would like to take you up on the recent trend we're seeing play out there, and that's the area of the short stay apartments. I would like to know what's driving this segment, and if you think this can be sustained in the long run.
Okay, so to answer your question quickly, yes, it will most likely continue. But to give it a bit of a background, the short stay market really started around 2017, 2018. And we saw that it brought convenience, and I think MasterCard and Airbnb brought out a report that put Lagos State number 1 in terms of growth rate in Africa. So that has been ongoing. And then when the acceleration came, that would be COVID-19, we saw the hospitality market take a bit of a hit, which they are trying to recover from. And so that just moved more people into short stay apartments. So what you find is that short stay has the convenience, it has quality levels that are close to what you have in our big brand hospitality chains. And then you also see that they are in more places, at the same time. So you have them in Ikeja, Surulere, Ikoyi, Oniru. They're just everywhere, and they are easier to retain, they are easier to manage, and you find that many operators have their rooms booked 6 months, in advance. So that trend is likely to continue. Now, the hotels, in my estimation, will come back. They always do. They might take some time, but they will come back. Now, when they come back, the question will now be a reconfiguration of their value proposition, such that they provide more value when compared with the short stay. But the short stays.
All right, finally, Ayo, before I let you go, I would like you to speak on what we're seeing play out in the retail space, and what your outlook is for that segment, especially with the news filtering in the fact that we're going to be seeing Burger King playing the Nigerian space in the fourth quarter.
So it's a fantastic question you ask. Retail is going to grow. There's no other way to look at it, largely because logistics has come in, and you find that firms are finding out that they don't really need to open retail locations in as many places. They can just leverage across logistics businesses. And then, of course, you find that even large name retail brands are looking to come to the market, and we're expecting a few announcements soon. But retail is strong, retail is recovered, and even as of Q2 2021, they were beginning to post numbers that were larger, year on year when compared with 2020.